The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Wednesday morning, just after 9 a.m. Eastern time, we got markets rolling over to the downside. We got two-way moves every single day, it seems like. Not every day, man, but we're getting them right now. Overnight, not sure why you caught a bid, and the market kind of caught up to that idea as well. Since about 7 a.m. this morning, the S&P's just dropped 30 points. We're coming right into the session lows in terms of where you were last night at about 8 p.m. Eastern time, when it looked like the market was on a straight one-way trip to negative prices. Saved itself for a moment, and just like that, we're back negative by 15 points at 39.60. Excuse me, NASDAQ 100, not quite down to that level yet, but you're only talking about 20, 25 points. You're negative by 44. That's about 1/3% in the NASDAQ 100. You have the Dow off about 0.3%, right near those lows last night as well, 32,592. And we got the Russell down by 6 points again, approaching the overnight lows. Bitcoin trading higher, up by $420, 23,830. Not sure what's going on with Bitcoin, man. Crude oil backing off a bit. So we got euro inflation this morning. We'll talk a little bit about that. That driving some of the action this morning. You got gold driving higher from yesterday at 1810. Early in the day, we're at about 1815, excuse me. And right now, we're trading at 1845, up $8 on the session on gold. Silver, up about 3 pennies right now at 2110. We jumped to notes and bonds. What do we got? We got lower price, and we got higher yields. I heard on Bloomberg early this morning, something like the 2-year, 30-year, the greatest inversion ever for between the 2-year and the 30-year going on. Excuse me. And let's pull up those rates right now in terms of where we are. Right now, you're talking about a 10-year approaching 3.96%, okay? And when we jump over to the yield curve, let's pull that over just for a quick glimpse. You're talking about a 2-year, 4.84, we'll call it. And the 30-year back at 3.93. The 10-year right now, there it is, 3.96. Pretty remarkable when you look at those numbers, man, where you are. The 2-year right now, I was thinking about it yesterday, right? Even you take 50 grand, folks, and you put it in a 2-year, they give you back 55 grand in 2 years. That's quite an attractive rate, man. When you talk about a 10% return over 2 years, 5%, that's where your 2-year is right now, man. That is some competition in the market for capital, to say the least, especially if you are anywhere near retirement, man. Can't deny guaranteed money in a market that, boy, things look a little dicey, man. The rallies, they fade pretty quickly. We got two-way moves all across the board, man, but it seems like every time we challenge a high, you get a little bit of a sell-off in this market right now. And backing things off, let's put it even on a 4-hour. We're at 39.60. I mean, 3,800 seems like the next area. 3,900 to 3,800, that's where you chopped around just towards the beginning of the year. And if you break below that, 3,500 is the next stop there. All right, let's jump to some of that inflation stories. So you had Germany out. Man, you talk about some inflation. European bond yields rising this morning and getting into it. President of Germany's bank and one of the ECB's more hawkish members telling CNBC consumer prices rises are set to remain stubbornly high. They're talking about maybe 6 to 7% inflation for the year over in Germany. Bond yields rising. And then again today, on that latest data, the yield on the 10-year German Bund rose to the highest level since 2011. So there's going to be some competition for yield for sure. Let's jump to some of the currencies. And it's a great day to have this happening because we'll be talking to our man Teddy Kegstad at 40 past the hour. Writes the Tiger Forex Report, does an outstanding job on Forex. We'll talk to him about some of the Forex action this morning. Dollar index, there's your daily. But boy, check out the 15-minute. There's some action for you, man. Dollar index, right? You actually got a weaker dollar going from 105 to 104.10 overnight. We're catching a little bit of a bounce right now, but boy, still negative by 50 ticks right now. And with that, you're going to mark it down by 13. We check out the yields over that time. Yeah, we've had an acceleration, but nothing like what's going on with the currencies right now. We jump over to the euro US dollar. There's a move for you, man. Almost to 107, 106.9 to the euro US dollar. We jump over to the dollar yen. Dollar yen with a little volatility was up to 137 almost yesterday. And just like that, you pull back to almost 135. Dollar yen at 135.85. Okay. They talk about inflation over at the ECB. In terms of what we talk about next, well, let's talk about yields, for instance. 30-year mortgages, right? Highest since mid-November. Contract rate increasing to 6.71% last week. 6.71%. Home purchase index applications lowest since 1995. Boy, how do you digest this one? I was talking to my dad over the weekend, and there's so many factors, right? And what he was just talking about, because he understands the cost because he builds houses, is the cost to build these houses in terms of being willing to sell a house at a price point, okay? And this is my words adding to it, but the component costs to replicate what you have, man, they're going up. So it's not like a lot of homes would be incentivized to be sold if the cost to make those homes have gone up so dramatically that you can't even rebuild the house you're going to sell at the current price, etc. 6.71%, quite a number, man. In terms of mortgage rates, rise to the highest since November. And yeah, and check out the index purchase applications. Easily an inverse number there. And look where we are. Okay, you just made it above 7% at the end of last year for the mortgage rates. And it's not slowing down right now, folks. Yeah, Mortgage News Daily put the rate at 6.85% right now. And you got refinance applications dropping 5.5%, the third straight decline. You know, we'll see where that market plays out. But nonetheless, higher rates are going to mean tough numbers when you're looking at home sales. And if you haven't been listening, folks, if you're in the insurance market in Florida, go get a citizen's quote if you're dealing with problems with insurance, because many times they can offer you a much better rate. You know, find out where you're buying. There's a couple differences between citizens and private insurance markets. But boy, it's some of the differences. You should really check into it. And the bummer of that is that many insurance agents, because I had originally went back to my insurance agent, and they came back with some line that was something like, oh, no, they're just an insurer of last resort, and so we don't do those policies. Something to that tune. Thankfully, I'm aware enough. I have my dad, I have TFNN, and he was out here saying, no, you just got to follow up. You got to get somebody else. And sure enough, we got somebody else. And the quote for a citizen's policy, folks, for me was like $2,400 versus $7,300. Did you hear that? $2,400 versus $7,300. Yeah. Either way, segue from the housing. That's something Florida's dealing with in dramatic fashion. All right, let's take a look at some of the equities this morning as we come into the first break. We got Tesla shares this morning up a bit. Elon Musk, the richest man in the world yet again. We jumped to Amazon shares, down a bit, down about 20 cents for Amazon after being up to about 95. We got Lowe's earnings this morning. Lowe's trading a little bit higher on their numbers, up to 206.75 right now. You had Target with their numbers yesterday, actually finished higher on the session. They're a little bit higher as well. We jumped to the big dog Apple. Look at the reversals, man. Just huge moves in this market, folks. We jump over to the VIX this morning. A little bit of an elevated level, but we are getting some extreme moves in both directions for a VIX, just to be hovering at about 20. And what are we? We're 3 weeks away from a Federal Reserve meeting, folks, okay? March 22nd, 21 days from right now at 2 p.m. Eastern Time, we get the next announcement. 2:30 p.m. Eastern Time, we get the next press conference. 3 weeks flies, man. And you know what else? It's March 1st. It's the first trading day of the month. And we're going to be talking to our man, Kevin Hincks. When we come back from this break, stay tuned, folks. Right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps right now down about 10 points, trading at 39.66. Let's jump over to our man Kevin Hincks. Every trading day, folks, 12 noon Eastern time, fast market from the TD Ameritrade Network right here on Tiger TV. Every day at 12, folks. Check it out. Kevin Hincks, Tom White, the team, outstanding program. Kevin, we got a new month on March 1st. Happy March, man. What are you thinking for the month of March versus where we came from quite a month in February, man?
Good morning, Tommy. You know, people in the Midwest see the month of March differently than people in Florida, Tommy O'Brien, and we think that most of winter might be over or in the rearview mirror. So even though we're supposed to get some snow here in Chicago on Friday, but we think we're pretty close to the end. The market, that's a little different story because the market's struggling with some higher interest rates, with some overall sluggishness and the stickiness of inflation, Tommy, and that's what we're dealing with. Higher rates, you know, they affected mortgage apps this morning, another dismal mortgage application number that we got early this morning. Good news out of China, some of their PMI numbers came in stronger than expected, so they've got the foreign markets a little higher this morning, Tommy, but our numbers are muted. But we do have Elon Musk on board today. The Tesla Investor Day should be always something entertaining, Tommy.
To say the least. If you can't say anything, man, it's got to be. I say that Twitter is the greatest reality show going on right now, Kevin. That's my perception, just as it being a private company. I'll say, I'll watch some of those headlines come out, man. Tesla shares, I got them up here on the Thinkorswim platform, up a little bit this morning. Quite a run for them to start the year. Elon, the richest man in the world. I wonder if he'll touch on that during Investor Day. I wanted to ask you, Kevin, about the VIX. We got the VIX sitting at about 2077 as I pull it up on the Thinkorswim platform. It seems like we're getting some pretty large moves in almost both directions. You could trade this market depending on where you put your stops, what kind of action you're looking for. But when I pull up the chart, I mean, some of the moves in both directions. What do you think of where the VIX is right now for volatility as it's priced in this market with some of the moves we're getting, which are pretty substantial, man, in both directions?
Well, for, full disclosure, the VIX currently sitting where it is right now at 2077, up slightly to start the day, is elevated historically, right? The average is about 15.4. But, as you know, it's spent much of the last 2, almost 3 years elevated up at these levels. So some people may look at a 2021 VIX and think it looks cheap based on where it's been. Now, It is still historically high, though, so you've got to be a little careful, especially going into the spring and summer. But a down market will give you some elevated VIX. Just remember, though, with the VIX average around 15, it is still elevated. And a lot of the crisis that VIX to high numbers is really in the rearview mirror. So be careful here with overall implied volatility, even though a 20 VIX looks relatively cheap, Tommy.
It's pretty amazing. It's important. I appreciate you adding context to the environment that we're in. And you can go back on the VIX in many different time horizons. I just pulled it up on a 5-year weekly, Kevin, just to get some kind of the pre-COVID VIX numbers. Absolutely remarkable that this thing, it goes down to 1017, folks. There was probably a 9 somewhere in there, I think, maybe the years before. But this thing had an 11 handle going into 2020, which is absolutely amazing.
Right.
And then, of course, it takes off. With that in mind, Kevin, we march forward. We're in March. We got a Fed meeting coming up in 3 weeks, but we still got some equities moving before then. What are you guys talking about on Fast Market to kick off March?
3 great earnings plays coming up on Fast Market today. Salesforce it will be in our first segment. Like Foley will do a presentation on Best Buy, the electronics. Remember, with everything moving towards essentials away from discretionary, Best Buy should be very interesting. And then Snowflake. We'll get into some cloud companies with Snowflake. So Salesforce, Best Buy, and Snowflake today, all coming out with, let's see, Best Buy. We've got Snowflake and Salesforce after the bell today, Best Buy tomorrow morning.
I love it. I appreciate it, man. 3 great stocks, Best Buy, Salesforce, Snowflake. I mean, Best Buy, Salesforce, those ones always on my radar. The cloud is the future, man. But talk about growth stocks. Look at this Snowflake. 400 and change on a couple occasions the last couple of years, sitting at 154. Kevin, we appreciate the time on a busy morning as always, man. We'll be watching at 12, and we'll talk to you tomorrow.
Have a great day, Tom.
You too. Folks, tune in every trading day. These are 3 great stocks, man. Check it out. So Best Buy, you put this thing on the chart, almost gives back the entire COVID run. From $50 up to $141, you just traded down to 60. Now, you're up $23 off of the lows of 60. But, boy, you're still in a losing position almost anywhere. Pre-COVID even, you're still in a losing position, right? Think about that. Think about everybody outfitting their whole entire home office, right? Laptops, sprucing up the television, staying at home for a greater degree, all of that stuff, and then Salesforce. You talk about a fall. 311 down to 120-something, right? 130. What was the low? Let's check it out on Salesforce. 126.34 from 311. Yeah, you're up to 163. They purchased Slack in there. Where was Slack? I think Slack was somewhere that they came out with it maybe last. We got to go two Marches ago, or 2 Februaries ago, excuse me. Yeah, 2 Februaries ago. I think that drop off there was when they announced they were going to spend all that cashola on Slack. You run up to 311 and then you fall off like many other growth stocks. And what they say, Snowflake, the cloud company, a fall as well from 400 to 153, all of them. Now, folks, if you're not familiar with the Thinkorswim platform, okay, one of the greatest tools I like when you got companies coming out with their numbers is the market maker expected move. Now, if you understand implied volatility, it's very easy to understand in that it's the implied volatility of the move around an event. Now, where does that number come from? It comes from you have a $14.33 move priced for the week. And if you take the event out of it, that's about a $12.69 move. Their numbers, as Kevin mentioned, tonight after the bell. And that company, about a $12.69 move. So you're looking at what? 8%, something like that. We jump to Best Buy. They'll be tomorrow in the morning, about a $5.28 move for an $83 stock. And Salesforce, after the bell tonight, about an $11.40 move, $163. So you can look at this event, and what's nice is you kind of figure out how much volatility is going to be sucked out of this market, talking about options premium in particular, okay? But just understanding the market expected move over the long run. Are you willing to take that type of volatility if you own the equity one way or the other? Because that's what the probability is right now, that they're pricing in an $11.40 move in either direction. Okay, you want to buy volatility in either direction on this? You need to make about $11.40 in either direction to make what you're going to have to spend to buy that volatility premium, is one way to put it. But it's important because you understand how much that's going to take away. And then as you go down the line, I mean, what's cool is sometimes all you really got to look at is the weekly. Because then at least you understand, okay, I'm buying it on Wednesday. I got exposure through Friday. This week, they're factoring about $12.35. Well, what if I buy the next week's options that expire March 10th? Well, if I buy the March 10th options, I'm buying about $14.90 of volatility. But really, you're only paying about $2.60 or $2.54 of volatility premium for the extra week beyond the earnings week. Because all that volatility you're paying to go out to March 10th, $12.35 of that volatility premium. You better probably catch up this week, because that's what's being priced for this week's action because of that event with earnings. So it's interesting understanding all that, even if you're trading equities, understanding the moves that are possible, especially as you're coming out with earnings. And that's what they'll have. Salesforce. Market, fading a bit, man. 39.62. We were just down at 39.60. It's going to be an interesting open, I imagine. Stay tuned, folks. We'll be coming back in 3 minutes for the opening bell.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps right now down about 11 points. NASDAQ 100 down 19. All the markets in the red. Crude negative by 38 pennies right now. We jumped to gold up $8. We jumped to some of the currency action. Dollar index 104.36. We jumped to the euro right now. Euro US dollar 106.71. We'll be talking to our man Teddy Kegstad in about 10 minutes, coming up at 9:40. And before we do, though, let's jump around to some of the articles I had pulled up. Let's talk a little coals to kick things off. Now, it's interesting. completely anecdotal, right? Have no position in this. I texted my dad this morning. I should have shorted Kohl's, man, because we were talking about it. I was talking about how great it was during the pandemic, and then something happened, man. My user experience, okay, not the same in Kohl's in the last year, which is remarkable. Because you take, well, that's US dollars, excuse me. Let's jump over to Kohl's. There's Kohl's. You chop around, man, and you want to talk about simple technical analysis, folks. What do? You build a consolidation area. You break out of that consolidation area last May. Come back up and test it, and boom, that's the sell. From about 46, this thing's now chopping around between 25 and 35. They're only down 3%, and I say that because they were all the way to $24, man. So this chart could have looked a lot more dire on the daily. You're charging back even as the market trades lower, so somehow the market is okay with these numbers, and I don't get that. Can somebody in the den enlighten me? Because I'm going to go over the numbers right now, and they are some tough numbers, man, for Kohl's. And I'll add my anecdotal experience. It's not good recently in terms of at Kohl's. But nonetheless, their numbers, how about a surprise loss from a profit? How about $2.49 for a loss per share versus expected earnings of 98 cents a share? They miss on revenue, okay? The fourth quarter, the company's net income fell dramatically to a loss of $273 million. That's the $2.49 a share from a net income of $299 million or $2.20 a share. Yeah, you talk about a turnaround. Same-store sales dropping 6.6% in the quarter, okay? Now, they say they're taking steps to do better, et cetera, et cetera. Here's a kicker. Check this out. Overall retail spending, you talk about inflationary pressures. Overall retail spending has grown by 28.4% compared with 2019. How the heck does that happen? Well, we know, okay, some of the impacts that are going on. Still a very startling number, man, when you're talking about it. It's barely 2023. But guess what? During that same 3-year period, spending at Kohl's fell by 15.4%, and profit at the company plummeted by 203%. They're in big trouble, man. You don't have a retail industry growing by more than 28% and your share plummeting and your retail spending dropping by 15%, right? I mean, they had a huge wind at their backs, and they couldn't even keep what they had in 2019, let alone almost a 30% increase in retail spending overall. Where's it going? Somewhere else. Not going to Kohl's, man. Now, it's funny that, so they have a huge Sephora in Kohl's, and I was just in Kohl's this weekend, and I was saying, you know, it's interesting that the Sephora sign on the front of their stores, and they got huge stores, the Sephora sign's almost as big as the Kohl's sign. And meanwhile, the Sephora area in that shop is decent sized, but I don't know, what's 200 square feet, something like that. But the store in general, folks, it feels like it has a discount, almost like a Marshall's type, you know, decent quality, but discount. Yet the items are not priced to discount. And there's a big gap there. And they had a huge toy section during Christmas, which was great. And I hadn't even realized that they have like no toys now. So they just like flood their store with toys. It's a good idea. You got people, you have foot traffic that you can capitalize on, right? But their items are priced like you're walking into a Macy's or something. My perception, they're priced like you're walking into a Dick's Sporting Goods. And meanwhile, they don't have the selection. They don't have, I'll tell you where I really lost it, is that I started looking at a bunch of things on the Kohl's rack, and it had where you had, and this is small stuff, but think how messed up this has to be for a store to be operating like this when they're charging $40 for a pair of Nike athletic shorts or something like that. I can go to Bell's or Beal's Outlet. I was confused with it. And if that same pair of shorts is there available, it's $15, $10, $12, $20 maybe. And I go there to Kohl's, okay, and you have items that are sized incorrectly on hangers. So you know how you have the hangers tell you which size it is to make it as simple as possible when they're sitting next to each other? And what was happening is that there were sizes all over the place in there. It made no sense whatsoever that I was paying $40 when I felt like I was paying for the price for a store that was barely shopped and barely maintained, but I was okay with that because of my savings. Nonetheless, I would be careful of this one, man. They're going to be up today, and you just heard the numbers I was talking about. Now, I don't know what they said in the conference call yet. Maybe it was a big one, but that conference call began at 9 o'clock, and this thing just accelerated higher on the open. So not sure what they said in the conference call, but it was ironic. That was my experience. I enjoyed going in there during the holidays. We bought stuff. They got a nice kids section, but it's a lot of real estate, man. Now putting Sephora in there probably is a smart move, but I find myself refusing to buy clothing from there anymore because, if I want to pay a premium price, maybe I go to Dick's Sporting Goods, and I'm talking about athleisure or something like that, right? $40 for a pair of shorts at Kohl's, man. I'm not hip to that party at all. And guess what? Looks like many people catching up to that deal as well. Seems like the perception is very high priced, and they don't have the allure to where is their place at that price point is the best way to put it. Okay, what else did I have pulled up here? Where are we going next? Let's see. I have a few articles I want to talk about. Let me make sure we jump around. Well, this is one we have to get to. So this is going to be a game changer, folks, and I'm not going to miss it, man. When is March 4th? It's this weekend, right? Yeah, Saturday night at 10 o'clock, okay, Eastern time. Put it on your calendar. If you have a Netflix subscription, Chris Rock is going live, and I bet it's going to be awesome, man. 10 o'clock, I'm usually sleeping by 10 o'clock. Maybe I'll try and stay up on Saturday night at 10 o'clock for the live Chris Rock set, and the kicker is he hasn't said anything about what happened at the Oscars a year ago. Why tell anybody your reaction for free when you can build a Netflix special around it that you host live? It's going to be a live Netflix special. I believe that's the first thing that they're doing, something like that. And this is part of the 2-show deal he signed, I think back in 2016, they say in here, for about $40 million. He's a brilliant businessman. Why would you give all these interviews for free when you got a Netflix deal and you can do it live? And I imagine it's going to be an interesting one. He's been doing gigs all over the country. Now, check out this. You talk about a market, man. He's been doing solo gigs since last March. He already had all of this stuff lined up, which was the kicker. Okay, so he had a huge tour that he was all ready to go on in terms of solo acts. Since last March, he's done 100 shows. He's been in England, Germany, Australia, New Zealand. His solo shows grossed about $700,000 per night. He's done 100 of them. That's $70 million in gross ticket sales. And I know a lot of people get a cut out of that, I'm sure, when you're doing a gig like that, going to England, Germany, Australia, New Zealand, etc. But it is a solo gig, so to a certain degree. The expenses, now you're bringing in a ton of people, okay, all that stuff, but it's a solo gig, as in it's not some type of huge production that you may put on to the same degree. So he's been sorting out his jokes. A few of them have snuck out, and it's going to be pretty amazing when they start doing stuff live, and that's where sports are going to be, right? And you can't miss that type of action, man. So it'll be interesting to see how that shapes. I wonder how many people they might just get to sign up just for that alone. How many people really haven't even signed up for Netflix if you have any interest? But that might drive some signups, man, because I want to see it live. Everyone else is going to be watching it live Saturday night, 10 o'clock. There's the Netflix ad for you. Netflix shares higher today with the market marginally lower. Stay tuned, folks. We're coming back, talking to our man Teddy Kegstad. We'll talk some Forex. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the S&P right now, negative by about 9 points, trading at 39.66. Let's jump over to our man, Teddy Kegstad. Folks, we talk to Teddy every Wednesday at 40 past the hour. You can read Teddy's Tiger Forex report. Every Monday, he puts that out. Check it out, folks. TFNN.com. Head on over to TFNN.com. You head on over to the newsletters tab. I'm going to pull it up real quick. You head on over to the Tiger Forex report. You'll see it on the bottom right, $97. And folks, if you haven't checked it out, it comes with a 30-day money-back guarantee. Sign up for it while we talk to our man, Teddy Kegstad, and you'll be in action by the time we're done with this interview. Teddy, we got some action today in currencies as usual. Good morning.
Good morning. What would you like to talk about first? I have a trade in the yen setting up for you if you want to talk about that.
Let's do it, man. We know we got a lot of listeners that like talking about the yen. What are we looking at for the yen?
Okay, so for those of you that are classical bar chartists, we have kind of a bull flag situation coming up. And for if you're a candlestick trader, which I wrote a book on, and I'm bringing the candlesticks, we have a continuation pattern that's forming. Now, it hasn't completed itself, but it is forming. So now Friday, we had a big surge in the dollar, okay? Now, when you have a big rally in this situation, okay, and then you have where Monday and Tuesday and now today, you have slightly lower trading days. Ideally, it's a 3-day pullback, where you have kind of a consolidation, a little bit of testing support. The key is tomorrow. So if we basically settle where we're at today, right now, where we're trading at right now, or maybe even a little bit lower, as long as we don't take out the opening from Friday, and I don't see us having a big trading day range today to begin with, and if we have a big reversal to the upside tomorrow, that would complete the following three methods trading pattern, which means that's a continuation pattern, which means that the U.S. dollar yen probably has a good chance at, if this pattern completes itself, now key word is complete itself, if it does that tomorrow, then Friday into next week, you could probably see the yen trading probably every bit of 2 to 3 handles higher than where it is right now.
Nice. And you're looking at those on a daily for those candles?
Yes, on a daily basis. So if you look at it from Friday, you'll see how there was a big bullish surge. Monday and Tuesday were kind of relatively quiet trading days, but lower. And today we are doing the same. And ideally, it's a 3-day pattern when you pull back off of a move like Friday, but it can be 2 to 5. And the thing is, the candlestick pattern is really, if you put it into a bar chart, instead of using the regular candlesticks and you put it into a regular classical bar charting pattern, it would look exactly like a bull flag situation setting up. It's a very similar type of pattern.
Nice. Yeah, and there's I feel like I'm seeing headlines every single day, and I know I'm not every day, but in terms of the yen, in terms of the new governor over there, in terms of the volatility that you could see, quite a runoff 101, but it is interesting in terms of how volatile, and it seems like the headlines somewhat conflicting in terms of where things are going to go as he steps in.
Sure.
Where do you want to go next? We have some inflation in Germany, of course. You have some action going on with the euro, with the dollar. You want to jump around there?
Okay, sure. Well, as far as the dollar index, now, those that read the Tiger Forex report, if you read it on Monday, I was calling for a lot of sideways action. And for the most part, that's what we're seeing this week. Now, we do have a surge in the euro US dollar and, ironically, the New Zealand dollar US dollar today. But overall, markets are very choppy and sideways. You know, the euro, which is the biggest weight in the dollar index, obviously is driving the dollar index today, you know. And I think that you have this inflation number. This is something we've been talking about for, ad nauseum now for months, about how the German economy is, crippled, and how things are definitely escalating in a negative way, So inflation running at 7%, that is not good for the EU at all, So I think that you're going to see the ECB remaining hawkish, but they can't be as aggressive as we have been, and now the fact that we're looking at our Fed not leaning back, where they're going to basically probably keep on doing quarter point raises for quite some time now, in the future, that means it kind of negates a lot of what they're going to do, So I think that what you're seeing today is a spike with the euro US dollar. I would be very cautious if you're a long, I keep your stops tight, and I think it's a sell rally forecast right now for that market.
Nice. It's a great take, man. It's going to be so cool, just even as traders, to see where it plays out, because, boy, you talk about not mission impossible, but yeah, they're dealing with their woes, we're dealing with ours, and they're saying, man, I can't believe Powell's going to go back at it. Why didn't the U.S. get their inflation under control, right? Because that gives a headache everywhere as Powell just ramps it up on those economies and on their pursuit to tame inflation. Where do you want to go next? You talked about some of the other equity Forex pairings.
Well, I would say one of the key things to watch out right now or to be careful with is for instance, the U.S. dollar Swiss. That is chop suey. I think you have a good chance to get a nice rally to the upside. I would be very cautious though, because I think that any big move you have to the upside is going to be a sell rally forecast for that currency. But right now it's going to be a very tough trade on a daily basis. So unless you're really focused on that currency and know it well, I would stay away from it. I think that you're going to see most of your action in the euro US dollar. The pound, I think also right now it's consolidating. I think you're going to see a move there as well, especially because if these inflation numbers are hitting the EU, what happens to the EU happens to the UK as well, predominantly, So, and I think that you're going to probably see some knee-jerk reactions with that as well. I would expect to see some volatility kicking up, but I would be cautious as far as direction. We have a situation where, for instance, the U.S. dollar, Canadian dollar, that's been in a wide range trade for months. It had a surge last week. Now it's kind of flattening out, so I think that we're coming into, I hate to say it, but I think we're coming into a very directionless market for the next probably 3 to 4 months for most currencies, whereas, the currencies luckily trend 70% of the time, 30% of the times they consolidate. Well, now I think we're coming into that 30% phase. So I'd be very cautious with trend moves. I would pick your points, in your targets, keep them kind of tight, and your expectations as well. I wouldn't expect to see any radical moves in any of the currencies, and as far as on a trend basis.
Nice. And for those listeners, I know we got a question in the Tiger's Den, just asking you. I know you've talked about it before, but your book on candlesticks, what's the title of that, and where can people find that if they want to?
It's High Probable Japanese Candlestick Patterns. So, and they can get it on Amazon. It's in Kindle and paperback versions. So, and it's in full color too also. So examples the following 3 methods, I was discussing about the US dollar yen. There's a chapter on continuation patterns, and it discusses how to trade it and how to, evaluate that situation too.
Candlesticks are great, man. I hear you. So folks, check it out and check out the Tiger Forex report, man. It's so interesting, Teddy, just how yields, central banks, currencies driving so much of the action. And man, we got some volatility coming down the line, I think, in equity markets.
Oh, we certainly do.
For the foreseeable future. I was kind of chuckling yesterday, the moves in both directions, man. And as a technical trader, some of these levels, it's just bouncing right off areas of support and resistance. Well, Teddy, we appreciate the time as always, man. Have a great week, and we'll talk to you next Wednesday.
Thanks, Tommy. Sounds good. Okay. You take care.
Folks, check it out. The Tiger Forex report out every Monday. And Teddy puts out updates throughout the week when warranted. And, I've learned a bunch over the years myself talking to Teddy in terms of currencies, yields, the interrelation or the relation of the two of them. And right now we're at the peak that I've ever seen in my lifetime in terms of how And it's because we're fighting generational inflation, and yields are on the rise everywhere as central banks are now beginning to combat that. And as Teddy says, it's a competition for yield, man. And the U.S., yeah, they're still in the game. Stay tuned, folks. One more segment. We'll be coming back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den. Available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. As I'm pulling up the equity markets, we're catching a little bit of a lift back to a 15-minute chart. And as you see, bumping off the lows of about 39.60 pre-market. We're trading right now still negative by 4 points on the session at 39.72. Jumping around to another couple of articles I was reading this morning. Car debt is piling up as more Americans owe thousands more than vehicles are worth. It's almost the housing crisis. It's not going to be the same because there's nothing like the housing crisis. But dealers worry record prices leading to negative equity surge. Not what you want to see, man, when you owe more than your car. Combined with credit card payments and delinquencies, etc. Yeah, you want to make sure that, anyway, that says a lot. So that one's happening, right? Then, jumping around to what else we have. The labor market. This is from the Journal this morning, talking about the labor market shows signs of cooling off. They're talking about private sector readings, okay, job postings, talking about whether it's, you got ZipRecruiter, you got LinkUp, you got Indeed, and you got the jolts in the black. But ZipRecruiter and Recruit Holdings, two large online recruiting companies, say their data show the number of job postings is declining more Then that JOLTS number. Investors recently hammered shares of these companies after disappointing earnings results. So maybe they're a little bit ahead of even what's going on with the JOLTS there, as you have listings on the decline dramatically from where we were basically middle to beginning of last year, just above where we came in to the COVID pandemic, February of 2020. Apple, speaking of current things, this one interesting, I think it was out yesterday. Yeah, yesterday. From Bloomberg, the suppliers, they're racing to exit China, man. It makes sense. Gore-Tex, they're investing $280 million in a new northern Vietnam plant. They're thinking about going into India as well. They make so many of the devices for Apple and some of the other suppliers out there. Yeah, not surprising. Can you imagine running a company and you're making products in China right now and you're making them for companies in the U.S. and everything else is going on with balloons, etc.? Yeah, they're going to be moving out of China, probably to Vietnam as fast as they can. All right, folks, thanks so much for starting your trading day off with me. And Larry, check out Larry's trading webinar, folks, a week from today. Listen, you wanted a tease of it yesterday. Larry did 3 hours of radio yesterday. He did his show at 1, Dave White's show at 2, my dad's show at 3 o'clock, folks. Check out his live trading webinar. He is geared up, happening a week from today for Larry Pesavento. That's on the front page of TFNN. Stay tuned, folks. Our man Basil Chapman's up next. Live programming all day. Have a great Wednesday, everybody. See you tomorrow.